Hello everyone, this is Terry with Futures.io, and as always I would like to thank you for joining us today. It's my pleasure to welcome back Kevin Davey from KJ Trading Systems for today's webinar, 4 Great Entries and Market Direction Indicators. Throughout the webinar, if you have a question, please feel free to type them into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Kevin, and you'll get the pop-up to share your screen again.
All right. Well, thanks, Terry. And welcome, everyone. I'm Kevin Davey. And today we're going to be talking about some entries and market direction indicators. And they're kind of the same thing, so as you'll see. So today we'll be talking first, for those of you who don't know me, I'll do a brief bio of who I am, and then we'll talk about these entry indicators. I'm calling them entries, I'm calling them indicators. You'll see why, and you'll see what it's all about. And then we'll talk a little bit about how to turn them into strategies, and then at the end we'll have plenty of time for questions and answers. So I'm been on Futures.io webinars quite a bit, and some of my previous ones have been pretty popular. So I did it earlier this year. I did one on 3 excellent entries, how to automate them, and recently that's been the second most popular webinar that has been on this site. And then there's another one that you might want to check out. It was called Real Life Algorithmic Trading, and that one has almost 6,000 views on YouTube. So a lot of people are looking at these things, and today's not going to be no different. It's going to be more of the same. A lot of great information. But one thing I wanted to ask first, I'm going to launch a couple polls here, and just to get an idea of if you algo trade now or not. So people will see it, and you'll see it should be on your screen. Just answer yes or no if you currently algo trade. And we'll let that go for like about a minute, and then I have a follow-up question. So a lot of votes. Most of you don't algo trade. That's kind of interesting. So I hope you're here to kind of get some information about algo trading and maybe start to look at some of your trading a little bit differently. But those results are a little surprising. So, okay, I'm going to close that one, and it looks like about 70% of you do not currently algo trade. And what I'll do is I'll start the second poll. If you said no to the last question, are you considering it? Is this something you're looking to add to your trading plan, to your repertoire, whatever you want to call it? And okay, well, that makes sense. 80 to 20 right now. Most of you who aren't algo trading are thinking about it, and it's kind of a neat thing to think about, because there are a lot of benefits to algo trading, and a lot of them I'll be discussing kind of as I go. And now, knowing your backgrounds and where you guys are all coming from, I'll kind of be able to incorporate a lot of it. I will warn you though, it's not what a lot of people think. A lot of people think, hey, I just programmed something, turn it on, and then, I can go off and live my day and make money without emotions. Those kind of things are some misconceptions. So they don't really happen in the real world, but we'll get into that as we go. So I'm going to close that poll, and I thank you for that. All right. So first, we'll show our friendly U.S. government required disclaimer. don't trade with money you can't afford to lose. Past performance is not indicative of future results. Hypothetical results are just that, hypothetical. So anything I show today, anything you see anywhere, doesn't matter where you see it. If you see it on the trading forum, if you see it somewhere on the internet, treat it as hypothetical. And what that means is, unless it happens in your own account, you don't know that it's real or not. Once it happens in your own account, then you can say, okay, that makes sense. But everything else, hey, hypothetically, you could make money, you could not, even if your next door neighbor is raking in the bucks trading a certain way. So there's no guarantee. So remember that. All right, so who am I? I'm guessing since so many of you have not been algo trading, probably a lot of you don't know me. So I'm going to give a brief introduction and talk a little bit about some of my background. So I trade full-time, and I have traded full-time for about, I think about 12 years now. Pretty close to that. I was able to make that leap from part-time trader to full-time trader. And I also do other stuff. So I write. I've written a couple books I'll show you in a second. I consult. I've spoken at trading events. This was me down in Australia. It was my first time ever in Australia last December. And I had a great time down in Melbourne, Australia. So that's kind of my background. I also, if you get Technical Analysis of Stocks and Commodities magazine, I know a lot of you do. You might have noticed a new column starting in January of this year. It's called Algo Q&A, and that's my not so handsome face on writing that column. And so if you have questions that I might address in the column, feel free to email me, and maybe I'll write about it. Okay, so that's some of the writing, speaking. Really, what I do is trading, and I guess my claim to fame, if you could call it that, is 3 years in a row I was in a worldwide trading contest, and each of those years I finished with over 100% annual return, and that's real money, and that's up against some really good traders. So I was able to do pretty good with that, and again, that's real money. It's not one of these fake contests that you see where somebody will be demo trading, and anybody can play those kind of games, but this was actually a real money contest, and it goes way back. It's been around for a long time. Larry Williams won it way back when. His daughter actually won it, the actress Michelle. Okay, so I also, like I said, I also teach people. The 2017 winner was in a class I taught in New York City in 2016, and in the class I taught in 2017, the 2018 winner was there. So I'm also able to teach what I do, and people are able to use it. So that's kind of important to know. All right. Real quickly, I've written a couple trading books. You can go to Amazon and get them. Building Winning Algorithmic Trading Systems kind of goes through the process I use. Intro to Algo Trading is if you're really just starting out algo trading. It's an introductory book, and it's funny, it's gotten some 1-star reviews because people said, hey, this is nothing but an introduction. And I'm like, well, what's the title of the book? So yes, introduction. So it's going to be a pretty basic book. And then I just came out with a book about less than a month ago. It's called Entry and Exit Confessions of a Champion Trader. I actually give you a whole bunch of different entries and exits I've used, and I'm going to use these today in my talk, a couple from this book and a couple from the book on the right, which is a much smaller book, but it's also got 16 entries and exits that you can get. And you can get that free at my website, by the way. If you just go to KJ Trading Systems, you can just sign up and get that free book. So all the indicators that I'm showing today, the entries, there's 4 of them. They come from, I think 2 come from each of these books. So, and I'll tell you which ones, so you kind of get a head start with those books. And speaking of those books, at the end of the session today, what I'm going to do is I'm going to give away 3 sets of all 3 books. So the people who answer the question correctly and in the correct number, you know, I pick a certain person, you're going to win all 3 books. I'll autograph them all. I'll send them wherever you are in the world. May take a while if you're in Australia, but you know, you will get them. You just have to pay attention because the questions are going to be based on what I'm going to be talking about. But you get that nice 3-pack of books, which is kind of a cool thing, I think. All right. So anyways, one final one where I'm at. This is a view out my backyard a couple weeks ago. It actually made it on the local news in Cleveland, Ohio. That's where I am. This was sunrise, and you can see downtown Cleveland, Ohio, over on the right, but that's looking out over Lake Erie. It was a pretty cool sunrise. We don't always get them like that, but that was one of them. All right, so let's get rolling. I'm going to talk about 4 entries and talk about how you can create market indicators out of them. And then we'll talk about turning them into strategies and what else you got to do. And then, you know, we'll have time for questions and answers on this, on pretty much any kind of algo type thing you want to talk about. I'd be more than happy to discuss anything. All right. So trading, systematic trading, that's also algo trading, it's mechanical trading, rule-based trading. There's a whole bunch of different words for it, right? Based on funds, you know, professionals out there who are trading this way, it seems to be getting tougher. And in fact, 2018 was a down year for systematic trading funds. But even the years before that wasn't necessarily stellar. 2014 was pretty good, but you know, in general, it's getting tougher. There's more people out there who are trying to trade and do algo trading, and there are also better tools out there. So you combine the tools with more people, and it's getting harder and harder, and people are competing with each other. So it doesn't mean it's impossible, it just means it's not easy. And what it really means is every trader's got to continuously improve. And that's why I like seeing so many people who are considering algo trading who hadn't algo traded before, because you've got to improve. And maybe it's going to algo. You know, maybe it's doing algo trading a little differently. Maybe it's doing discretionary trading a little differently. But you know, whatever you're doing now, I can probably tell you that if you try doing the exact same thing 5 years from now, it's probably not going to work as well. That's just the nature of trading. You know, you look back at turtle traders, you know, they were killing it way back when, but today, not so much. They've kind of evolved. You know, when I was in Australia, there was another speaker who works with a lot of banks, and he was talking about creating systems that would actually use satellite images of parking lots of businesses to kind of gauge if, you know, Sears or Kmart or Walmart, if some of their stores were suffering. I mean, pretty cool stuff. So a lot of that might not be accessible to us as retail traders, but it kind of gives you an idea of how people are going. You know, 5 years ago, I doubt anybody was using satellite data, but now some people are. So that just goes to show that you got to continuously evolve. And, you know, I think some of the entries today, I can get you kind of thinking, and if nothing else, maybe you'll say, wow, I never thought of doing that. And this might just lead you off in a new direction, which is probably pretty good. But of course, you know, entries are only part of the puzzle. Everybody loves entries. And, you know, I've done quite a few entry-related webinars lately because they're popular. People love entries. You know, money management, diversification, psychology, exit, all those other things people sort of like talking about, but they really like talking about entries. But remember, it's only part of the puzzle. There's a lot more to it than just the entry. You can have great entries, and if you're missing some of those other pieces, you're going to be in deep trouble. So it's a piece. Remember that. All right. Okay, so as we talk about these entries and indicators, I just want to be transparent. I'm not the original creator of these. Some of them I might have put a twist on that kind of made them unique and made them my own. I don't know. I don't really track that, but I can probably guess I didn't invent these in my head. And you don't have to either. You can take what's out there and modify it. You can take some of these and just modify them and kind of put your own little spin on them. But I just wanted to be transparent that, you know, I don't want people to think, wow, he comes up with all these entries. No, I don't. I'm not the original creator. And it's funny because I saw a YouTube video once with some fake guru, some education guy, and he was talking about this thing, and he said, well, I was thinking about it, and I came up with this one night, and then he proceeded to show the code and everything for it, and wouldn't you know, it was my code for an entry for a different system than I'm going to show you today, but I had actually created it. Now, it's certainly, I didn't create it originally, but the code was mine, and he just changed, he didn't even change the variable names, and he was trying to pass it off as his own. And shortly thereafter, his YouTube channel got banned or got shut down, but which was kind of interesting. But anyways, I don't want you to think I created these, just to be transparent. All right, so let's jump into it. Entry A, and this is entry number 2 that's in that free book that you can get. I call it a with trend pullback. And the whole idea behind it is the long-term momentum is up and the short-term momentum is down. And that kind of indicates a long. So really the long indication, it's kind of telling you to go long when the longer term momentum is up, but then it's kind of like a pullback, okay? And the way you set it up if you're going to do it as an indicator is once it triggers, it just stays long until you get the reverse signal, you know. That might not be the way you want to trade it in a system, but as an indicator, you know, until the reverse happens, you want to stay in that direction. So here's an example, and this is with the micro E-mini from last week. I believe it was last week. I think it was the first day I was actually trading. But you can see how this works. And again, you know, there's parameters involved, and you can change those. And I didn't really change them. I just kind of took the baseline one and just threw it up on a chart. And you can kind of see it marks the red as downtrend, marks the up as blue trend. Blue trend. Oh, marks the uptrend is blue. I'm trying to talk too fast. I apologize for that. But you can kind of see it turned over right at a pretty good time. And pretty decent, okay? If you're a TradeStation user, I'm not going to go through all this code, but there's the code in TradeStation. Plain English, you have a short-term trend length and a long-term trend length, right? And if the close, today's close or this bar's close is less than the close so many bars ago for the short-term length, and if it's greater than the close of the long-term length, so again, long-term momentum's up, short-term is down, that's a long signal. And exactly the opposite for a short signal. So it's pretty simple. It also doesn't have a lot of lag to it because it's just using momentum. So it's not using like a moving average that tends to move more slowly. So this is pretty good. And people always ask me like, what's my favorite kind of market measure? And I would have to say momentum. If the price today is greater than the price 20 bars ago, 50 bars ago, whatever it is, then that's a pretty good indication to me that prices might continue that direction. Now, obviously, it doesn't mean they will, but that's kind of the general consensus. It's I think I'll talk about this later, but it's kind of like if you want to take a train from Chicago to New York, you don't get on a train that's headed west out of Chicago, right? Because that's headed towards California. You want to get on a train that's already going in your direction. And that's kind of the idea behind momentum. So that's entry A, okay? Entry B is from the other book that you can get on Amazon. And it's, by the way, if you have Kindle Unlimited, which is a subscription service, you can actually get this book for free. So no better deal than that. This one uses an RSI with a moving average. RSI is a pretty well-known indicator, and obviously everybody knows what moving averages are. So this one acts a little differently than the first one, but I'm saying if the RSI is below a certain threshold value and the close is above the moving average, that's a long signal, and that stays in place. So just that is a good entry, but it stays in place as an indicator until the reverse happens, where the RSI goes above 100 minus that threshold for shorts, and then the close is less than the moving average. Most of these, I believe all the ones I'm talking about today are symmetrical, so whatever I say for long, just do the exact opposite for short. So that's kind of what this looks like, and you can kind of see, yeah, I kind of got this uptrend. Let me get a drawing tool here. Oops. So you can kind of see it got that uptrend, got that uptrend, got that downtrend, but in here, not so good. Kind of went back and forth. And that's going to happen with just about any type indicator. You never get perfection. And if that's actually probably a good thing, because if you ever find something that's perfect, chances are you've either curve fit it or done something wrong. So you don't need perfection, and you actually don't want it either. A lot of people don't understand that. And this is actually for Colgate stock, which is kind of weird because what I was trying to do was do crude oil, and I forgot in TradeStation there's an @ symbol that you have to put in front of it to get the continuous contract. I forgot to do it, and Colgate popped up, and without doing any kind of optimization or anything, this is what occurred, and I'm like, oh, well, hey, this is a pretty good example, because it shows that it can be good, and it also shows that it can be bad. All right. So TradeStation code again, and I'm not going to go through this because I know a lot of you aren't TradeStation users. I'll just kind of walk you through the plain English code. So you have an RSI length. That's just your look back period for the RSI. You have your RSI threshold, which I have 70 here, and you have your number of bars that you're doing your moving average. So if the RSI, in this case, of the last 15 bars is less than 70, so that means it comes off something higher. Typically RSI will be between 0 and 100. Well, always it'll be between 0 and 100. So that means it's not in this real high region. And if the close is greater than the average close, the last 15 bars, that's a long signal. Pretty much vice versa for the short signal. And it either stays long or stays short until the reverse happens. So that's a pretty good way to do it. So that works out pretty well. And I should point out that, I'm just showing you, I think I showed, here's a daily for this first one. I think the previous one was a 4-minute chart. You can try these with tick charts or whatever time period you want. Now, it doesn't necessarily mean that they're going to work as well. In some markets, they might not work at all. A lot of this is trying things on your own and testing them. And we'll talk about that later. But that to me becomes the most important part of trading, of algo trading, is knowing how to test and evaluate. It's not so much which entries you pick, which exits you pick, it's that you evaluate them properly and not overfit and do all those other things. All right, so let's move on to entry C, which is our third entry, and this again is from that free book on my website. This one uses consecutive closes and percentiles. So what I'm looking for is the close above the average close, okay? That's sort of like the last one, right? And you might say, well, hey, these aren't that much different. What you end up finding, once you find some things that work pretty decently, you end up using them in a lot of different places, and you use them over and over again. And there's nothing necessarily wrong with that. You just got to watch out for the correlation where, if every system you make is based on crude oil and it all uses closing prices being above the average close, you might get yourself into some trouble sometimes because everything will be going long. So you got to kind of watch out for it, but at the same time, when things work, you sort of want to stick with it. So that's part of the condition. That's like a given. It must be that. Then it has a second part where one of these two things has to happen. It has to close in the lower 10% of recent values, and you'd specify the look back, or it has 3 consecutive lower closes. This particular case, you can see we have 1 consecutive close lower, another one lower, and another one lower. So in that, for that one, as long as the close was above the average close, this is triggered, and then a long signal would be triggered. And again, it would stay that way until the short is triggered if you're using it as an indicator. Pretty straightforward. And again, notice this does have some similarities to that first entry I gave where it was a longer term trend and then there was a pullback. So, you know, maybe the price was doing this. Now it kind of pulls back a little bit, kind of pauses. You expect it to go up again. And that's could be a good way to get in the market. All right, let me erase that. And here's a good example. Again, a different market, different time frame. You know, I didn't cherry pick these. I just kind of threw stuff up. I said, I just want to try some different time frames just to show you that things work in different situations. This one, the uptrend, it said it was an uptrend. It didn't work out. And I think that's important for you to know. It doesn't always work out. And the interesting one is that it did catch the downtrend, and you know, depending where you got in here, this was enough of a downtrend to make up for if you were long here. I mean, this is basically flat, so flat to down a little bit. So that's kind of a good good way to see those downtrends. Okay. So there's the code for TradeStation. It looks a lot more complicated, and it indeed is. Plain English, basically you have some conditions. First, you're saying if the close is greater than the close of the last 30 bars, that's true or false, right? Then, is the close below the 10th percentile of close in the last 15 bars? So you're looking for the last 15 bars, the first or second lowest close, if that's where you're at. So it's 10th percentile is pretty low, right? So you're looking something at that level or below. That's true or false. And then the other condition is the 3 bars down. If the close is less than the previous close, and the previous close is less than 2 bars ago, and the close 3 bars ago is greater than the close 2 bars ago. So those are all true and false, right? So each one of these can be evaluated. You evaluate each one. Then it's kind of a little hard to read here, but you take these and they only apply to the long signal, and then the other 3 apply to the short signal. So condition 11, if that's true, and either condition 12 or 13 is true. So as long as that happens, then that's your long signal. And then you take conditions 4, 5, and 6 to get the short signal. So again, it's symmetric. You know, instead of 10th percentile, now you're greater than 90th. Okay, but you still, that's a symmetrical type entry, and those are the kind I like the best. And even though some markets don't really like those, it helps prevent some curve fitting, which I think is the bigger evil. You know, I could have made entries, values for long and short. So right there, I could have 4. I could also, so I have these 2 and this, basically, right? Because this one's just 100 minus 10. So basically 3 variables here. But I could have made ones for long, another set for short. I could have had this number be something different. So I could have 6. And you might say, wow, yeah, I want 6 because that's going to fit it better. Oh, absolutely, it will. It'll give you much better results the more variables you have to define it. But what you got to remember is just because you're defining the past doesn't mean it's going to work that way going forward. And a lot of people tend to think the more variables, the better. I mean, I've seen people with hundreds, literally hundreds of variables that they optimize, and they come out with these back tests that just are like unbelievable. I remember a few years ago, some guy wanted to swap systems with me, okay? And he showed me his equity curve, and it just blew mine away. Just blew any strategy I had away. I'm like, I felt bad because I'm like, here I am, I wrote this book, and this guy's just much better than I am. And I told him, I said, your system is a lot better than mine. Your back test is much better than mine. And got to talking a little bit, and then he finally admitted that, one, he never traded that, and two, it was like fully optimized genetic optimization. So it wasn't even like an out of sample back test. It was all in sample. So basically it was a joke. And there was no way it was going to work going forward. But he didn't know that. I tried to explain it, but you know, all he saw was, hey, I'm better than Kevin at developing strategies. And at that point, I just kind of washed my hands of him. And as far as I know, he's still out there sim trading and curve fitting. So don't do that. That's just bad news. Okay. All right. Entry D is from the 52 Entry and Exit Confessions book. It's called The Two Friends, The Two Amigos, ADX and Momentum. And again, you know, I talked about momentum before, and so this is kind of a repeat of this, but this time I'm adding in the ADX indicator. For those of you who don't know it, it's I believe it was developed by Wells Wilder, and he developed it, I don't know how many, 20, 30 years ago. It's a pretty well-known indicator. It's supposed to indicate trend, and I do find cases where it seems to work pretty well. Here's a chart with it. And you can see it does a pretty decent job of identifying the uptrends and downtrends. You know, not perfect. Hangs around a little too long with this uptrend here and exits a little too late here, but you're almost never going to find any kind of indicator that goes right off the turning points. And if you do, more power to you. But if you do, if you see somebody out there who says they've created one, a perfect turning point indicator or something like that, see if you can demo it, borrow it, whatever, and watch it in real time. See how good it works in real time. Because it's one thing to show how good it works historically, but it's a whole nother thing to show how it works in real time. So that's just a good word of advice. Okay, so TradeStation code again. Plain English, pretty simple. You have your length of your ADX that you're using, and you also have your look back length of your momentum. So if the ADX of the last 14 bars is greater than 20, 20 to 25 tends to be a good measure of ADX trendiness. And the close is greater than the close of the last 20 bars. That's a long signal. So you could use that as an entry, or you could use it just as an indicator, and that indicator would hold until the reverse happened. Except the ADX I'm keeping the same because that's it doesn't tell you if you're in a bull trend or bear trend. It just says you're in a trend. So what I do here is just keep it, you want that. So basically it's a trend test, and then you add the momentum onto it. So again, it's pretty simple, but as you can see, And I didn't cherry pick these, but it worked pretty good. Does it work all the time? No, absolutely not. But sometimes they work out pretty well. All right, so one of the things, kind of like as a bonus here, what happens when you put them all together? You know, maybe you're thinking, well, hey, those indicators are okay. What about adding them together? And this was as of this morning, and so now I think this bar went up a little bit more. But you can kind of see sometimes there's some straggler points, but it got a lot of this downtrend in there. So yeah, there's a lot of slop right in this region, but it also tended to get that. So again, it could be, these things could be useful to you and could kind of help, if nothing else, just help out your market understanding. You know, if you have a system that wants to go long right in the midst of this, you know, maybe that helps you kind of think twice about it. I don't know. All right, and that's adding them together. If you just, I don't have the code for that, but you'd have to just kind of stitch them together, all those conditions. But you can do that, and that's certainly something that you could do both just with the entries and also to create indicators. So it kind of works both ways. All right. So, you know, the big thing as entries or as indicators, they're just helping you to understand market direction. And, you know, it's not a complete strategy. You got to put exit rules or filters, but, you know, they're good little things to try, and you could definitely come up with something useful. I've used these in strategies that I've developed. But it's not the end, it's kind of the starting point, and there's a lot more to do. You know, for example, I just showed you one chart. You know, you can't make a decision off of one chart. You want to look over 5 to 10 years. You want to do out of sample testing. I do walk forward testing, which is, I think, better than out of sample, but out of sample is better than nothing. You know, you definitely want to do that. And if you don't know what in sample, out of sample, walk forward is, hit Google tonight and do some Google searching, because you really want to do that. You want to use out of sample or walk forward testing. And then different markets are going to behave differently. You know, a lot of people like to say, hey, I should be able to use something, the same thing on all different markets. That's a great theory, but my experience, it really doesn't happen that often. And that's not just with algo trading. It could be with discretionary trading. Just because you can trade the ES doesn't mean you can jump over and trade crude oil right away. If you can, with the same techniques and everything, more power to you, but most people can't because the markets are different. The big thing, if you take some of these things and try to create a strategy, just keep it simple. The simpler things don't work better in backtest, but they usually work better in real time. And that's the tough part for a lot of people to understand. You know, they're like, well, I want a good looking backtest. Well, yeah, you do, but there's a point where if it's too good, you're going to get yourself into deep trouble. You got to be careful about that. So I'll talk about the strategy factory club I have. What's interesting about that is what I found is the better the systems people create in backtest, that's negatively correlated with real-time results, meaning the equity curves that look perfect tend not to be as good in real time. So, and a lot of that's because they curve fit and they made it complicated. So keep it simple. All right, so if you take those entries, or if you create indicators, however you do it, this is a typical trading process. You get your entries and your exits, you put them together, and you create a strategy, right? Then you got to test it, okay? And then if you're doing an algo, you can automate it, right? And then you automate a whole bunch of strategies, and you create a little trading business. Maybe it's a part-time, full-time business, but I think that's where most people want to go. They don't want to just create one strategy. They kind of want to make this more than just like a little hobby. But each step along the way here is a different degree of difficulty. If you look at the entries and exits, that's relatively easy. The ideas are out there everywhere. They're in your brain too, so you can come up with a lot of different things, but people say they have a lot of problems with this, and that's part of the reason I wrote that entry and exit confession book, because I wanted to put down some ideas for people to get started, because a lot of people say, oh, I can't come up with any ideas. Well, there you go, now you have some. But that's relatively easy. And putting it in a strategy, well, that kind of gets a little tougher. For those of you who look into algo trade, you've got to program it. You've got to learn to program. And different programming languages are different degrees of difficulty. Some are real simple. Some are going to take you a little bit. And if you've never done any kind of programming with a computer, if you've never written macros for Excel or anything like that, you might have a lot of difficulty. Now, some people say, oh, hey, I'll just hire somebody. I'll tell you what, you go to hire a programmer, you're going to be spending tons of money and tons of aggravation. Not to say they're not good. They are good. And I've used programmers for things I couldn't do. So that's not to mean they're useless, but if you're going to be creating a lot of strategies, you're going to be testing a lot, and most of them are going to fail, because most trading ideas and most strategies are going to lose money. That's just the nature of things. The first idea you come up with is probably not going to make money. It's not going to be a profitable strategy. And maybe the 100th one you come up with will finally work. I don't know. But if you have a programmer trying to program all those, that's going to be a lot of work, a lot of money, and a lot of work on your part just to monitor that person, right? Because you give a programmer a budget and tell him what you want, man, he'll go to town. So you really got to, if you really want to get into algo trading and you want to do this back testing and this kind of stuff, you really got to learn to program. So that's hard. And then you got to test and evaluate. And to me, this is the really hard part. It's not as simple as pulling up a chart, sticking a strategy on the chart, and optimizing. But most software will make you think that's what it is. That's not what it's all about. And I'll talk about that in a second. And once you evaluate it, you're ready to go, you automate it. That's relatively easy nowadays with most software. 10 years ago it wasn't, but now it is. It's just a few clicks. I use TradeStation, and I think it's like 6 or 7 clicks I got to make one time, and then it's automated and it will run. Pretty cool. And then you put that together, create a trading business, and again, that then is really hard, because you've got to, 1, create good strategies, 2, you've got to have that emotional discipline, you've got to figure out allocations, there's a whole bunch of stuff to that. So that's hard too. That circle is supposed to be, if I do it quickly enough, you'll see it's supposed to be on the test and evaluate. So I apologize for that. That's the hard part. And I think that's where most people who want to algo trade give up, because they either do it wrong and then go live and lose money, or they just never learn how to do it. And that's where some of what I do can help people, because I've been through it. I've done it. So I made so many mistakes. I eventually came up with my own process, got a trademark on it. It's called the Strategy Factory. It takes you from goals and objectives for a strategy or for your trading, and it runs through all these steps, machines, if you want to think of it as a factory, until you get to real money trading. That's what I do. And I now teach it in a workshop that's 30 hours of videos. It's an all-day live class. I personally give everybody email support. I don't have a team with me. It's just me. So it's a real small thing, but I give people one-on-one support. Just give you an example. Somebody emailed me half hour before today and said, hey, I have a question on something. Can we do some screen sharing tomorrow morning? And so I kind of juggled my schedule a little, like, hey, let's do it. So I'm actually going to record it because I think it'll be a benefit to the rest of the students. But this workshop was actually voted Trading Course of the Year at Trader Planet. It's got a private trader forum, and it's also got membership in this Strategy Factory Club, and you might wonder what that is. Basically, students create strategies, and you can see here's an example with the light blue is real-time performance. So you get your back test in white, your walk forward back test in white, and then real-time in blue. And they submit it to me, and I run it, and so I'm the judge, independent judge. You know, I monitor all these strategies every month. I think right now I'm monitoring, probably about 150 strategies that people have submitted. And they've submitted strategies that look like this. And you can kind of, not every strategy looks like this, obviously, but there's some very good strategies that students have created. And in fact, there's been over 260 since I started doing this that have worked really well in live testing. So, and that's the ultimate test. You know, people talk about back tests, and you know, I mentioned hypothetical and past performance is not indicative of future results. But I'll tell you what, when you start creating strategies that work in live, real time, that's when you know you have a good process. Because most people, myself included, back when I didn't know what I was doing, you'd create a strategy, you'd back test, it would look like that. You'd go live, and it would do that. And you know, I'm sure if I had you guys mics on, a lot of you would be laughing right now because you've been there. I know I have, and I probably still am sometimes, but tried to take some steps to prevent that. But the live test is what really matters, and so that's important. And so people have been able to follow the procedure I use and the process I use and create some very good strategies. All right, so that's a little about how I develop strategies, which again comes after you deal with these entries. Entries and exits, that's the first part. Create those strategies, then you test and evaluate them, and you put everything together, and you build yourself a trading business. You know, like I said, the last two steps are the really tough steps, but you got to start somewhere if you're going to be algo trading, and that's a good place to start, is with some of the beginning pieces to build your strategy. Okay, I'm going to do the book giveaway now, and then we'll stick around and we'll answer. I'll answer questions. So get ready. The way we're going to do this is I see everybody who's answering questions, so I'll be able to pick the winner. If you are the winner, what you'll want to do is just email me. I'm going to type in my email address in the question box, so you should see it. Send to all. You should see it there. And
Hey, Kevin.
Yep.
When you pick the winner, you can actually right click on their entry, and there's a copy email the address. So if you just
okay.
have their email, you can.
Okay, perfect. I will do that. So let me just open up a little window to do that. Okay, so I'm going to take the fourth correct answer, and so what you're going to get is paper copies of all 3 books autographed, and we'll figure out how you want the autograph. You know, maybe you don't want them autographed, and then you can go and sell them or something. It's up to you. I don't care. But you will get these books. So it's going to be the fourth person to answer correctly. So everybody get ready. What is most important? Entries, exits, or position sizing? So just type in an answer, and the fourth person to get it. Okay, you can stop. Let's see, there's 1 correct, 2 correct, 3 correct. It looks like Jens, you were the 4th correct answer. And so let me just copy that. Copy email address. Okay. And the answer there was a little tricky. They're all important. So you can't just say exits or entries or position size, and they're all equally important. All right, so that's the first one. Thank you. Now we'll go to the second one. This one's going to be the 3rd correct answer, and I'm going to do it real quick. What did all the entries I showed today, what do they have in common? Okay. Trend, momentum. Okay. And the answer I'm looking for was simple and easy to understand, but it looks like a lot of people said trend and momentum, which, you know, I did talk about a lot. So I'm going to go with momentum here. So Vicky, it looks like you are a winner too. So congratulations, and I'll be in contact with you afterwards. And then we're going to do one more package of 3 books, and the question's going to come up. Let me just type a bunch of letters just so I know, because so many of you are answering. It kind of gets tough for me to see who's doing it. All right. Next one. Second person to answer correctly. What are the hardest parts of algo trading? You can just name one of them. Okay, and you can stop. Wow, man, you guys are answering quickly. And it looks like RHF 603TT, which is kind of an odd name. I'm assuming that's not your real name. That's probably a nickname, right? Anyways, you are the winner, and the answers were testing and evaluating. That's one answer. Or you could have said building a trading business. Those were the 2 I talked about anyways. Okay, so those are the book giveaways. So now a lot of people are headed for the exits, but I have one more question, one more poll to ask you guys. I always like getting some feedback. Did you guys enjoy today's webinar? Yes or no? And if you say no, it's automatically going to explode and everything disappears. But then I'll stop talking. No, I'm kidding. You know, sometimes these go real well, and sometimes people are like, "What are you talking about? I didn't like that at all." But hey, it looks like people really enjoyed it today, so that's cool. Makes me know I'm on the right track with answering what people want out there with the webinars. So 97% of you are right now saying yes, 95%. So and there's quite a few people who voted, so pretty cool. Leave that open for a second. And I want to thank you for attending. And what I'll do now is kind of go through questions. Looks like we have like 10 or 15 minutes we can go through questions. If you have questions, type them in, and I'll try to get to them. And I apologize in advance if I do not get to your question, because there's a lot of comments here. And if you still have the question afterwards, just send me an email. There's my email address right on the screen. You can do that. So I'm going to close that poll. 95% of you enjoyed today. That's great. I love it. Makes me glad to be here. Okay. All right. We have a good question from Kathy. So I'm going to try to go these in order. So some of these might have been discussed during my presentation. But Kathy asks, I've heard the big guys use trading indicators that we just don't know about. Much more advanced. Is this true? And can you win against doing that versus doing your own? Yeah, I don't. Let's see. That's the easiest way to put this. From talking to some of these people, they don't necessarily use things differently. A lot of them know all these standard ones. A lot of them use them, but they just might use them in different ways. So for example, they might, instead of just doing directional trading, they might do more spread trading, where maybe when you buy crude oil, you also sell heating oil in a certain ratio and those kind of things. So they do more things like that, or maybe they use more options to kind of offset things. But can you still compete with them? Yes. Are you ever going to be at their level speed-wise for some of the things they do? No. But keep in mind, a lot of the things they do, they can't have real complicated codes either if they're relying on their speed, because they need something that just goes super fast, or else they lose their speed advantage. But a lot of the bigger firms, a lot of their advantage comes from just being able to do things a lot quicker than you and I. So thank you for that. Bats is said, algo trading is getting harder. How's your own track record lately holding up? Last year was kind of blah, but this year's kind of, it's looking up. Things have definitely gotten a lot better. But it's, you know, it's funny. You would think after doing it for all these years, it would be so easy now. And it was kind of funny. I was talking to somebody, you'd recognize his name if I told you. He's pretty much a trading legend. And he said, well, how are things going? And I said, you know, it just doesn't seem to get any easier. And he's like, what? It's not real easy? What do you mean? You've been doing it so long. Which kind of made me think, because every trader I know, no matter how good things are going, it's still tough, and it never gets simple. And it turns out later, I saw that same legend who supposedly has millions and millions selling something for like $49 on some internet site. So kind of made me wonder if he was as successful still as he said, but I don't think things are easy. Okay, another question. The examples are some uncommon time frames. How do you pick such time frames? I just picked those. I picked a 4-minute on that micro. I just picked that at random. You know, if I was actually creating a strategy, I would have a slightly different approach, but I just wanted to pick some times just as an example to show, hey, these things work on different times, without trying to pick one that worked perfectly. But yeah, there is something to it when I do it, when I build strategies. Somebody's asking for a range chart, but he left, so. And I didn't show any range charts. I typically don't use those because of the trouble back testing them. And somebody else who left said, can I have a copy of the PowerPoint afterwards? If you want a copy of it, just email me. I have no problem sending it your way, but you have to email me. Brian's asking how I'm determining momentum. It's just the close minus the close a certain number of bars ago. So it's the change in price. That's the momentum. Okay. Let's see. So now I'm just going through here, and I apologize. I apologize. There's a lot of people who are trying to get those books. Okay, here we go. Here's one from a Futures.io user, Hen322. Do you mainly focus strategies on daily charts? What about intraday? I personally, I love intraday. I love intraday trading because you're done at the end of the day, and you know, win or lose, tomorrow's a new day kind of thing. The problem is the market doesn't always agree with what I like, and it likes what it likes. And in the case of my trading systems, I found it's much easier to create ones that hold overnight, that are based on daily bars, that are a little longer term. And there's a few different reasons for that. One of them, you can think about the people who don't want to hold overnight. You know, you're kind of like an insurance policy. You're willing to take the risk where no one else is, and so you should get paid for that. There's also the fact that there's less noise. You know, it's hard to see a trend on a 1 minute chart, but on daily charts, it's sometimes easier. So I tend to do more of the swing trading type thing than real fast. I don't do any scalping. But again, some of that probably depends on my strategies. So, you know, you might have strategies that work real well intraday. Hey, go for them. That's what you got to kind of try to balance. Ultimately, it's not what I say, it's going to be what the testing says. And I can't stress that enough. The testing's going to do it. Ryan's asking for the TradeStation coding for entry A. Let me just go back. I can probably just show that real quick. There it is. Okay, and again, if you want the PDF of the slides, just send me an email. Nick's asking, do I have a way of keeping on non-trending markets? Yeah, I mean, there's a couple things you could do with like volatility, but ultimately it's a lot of times kind of hard to know if you're in a trending or non-trending market until enough time has gone by. So that's always a tough one. Kathy has another question. I don't code it all, and I find it very difficult. Could I really code through learning through my class? And how much does it cost? I don't want to talk too much about my the class. It's not cheap, I will say that, but I think the people who've taken it would agree it's well worth it. But at the same time, if you don't know how to code and you don't think you can code, as much as I'd like to help you, that might be a sticking point. One thing you could do is find somebody else, maybe some kind of trading partner who could code. And then you guys maybe put your heads together and say, hey, together we can make a go of this. You code, I come up with ideas, I'll test, you do this. Collaboration can sometimes really help. But in the long run, if you really want to algo trade and test, you're really going to have to code. Okay, Sandaltan is said, patented process for strategy development. Can you describe it a little, and does that consideration impact how it's managed within the trading system? itself. Okay, so the goals and objectives. He's asking about goals and objectives, and I guess 2/3 to 75% of people don't have goals and objectives. I just want a good trading system, but they don't know when they've got one, you know. This for me was a real breakthrough in my trading when I created a system. I had goals. I said I want it to do this. I want it to give this kind of return or drawdown, return to drawdown, whatever I measured. And I came up with it, and I knew if I kept testing, I could make it better. If I kept adding filters, but I said no, it does what I want, so I'm just going to go with it. That for me was a big breakthrough because that was the point I stopped trying to improve back tests, and that turns out to be a huge thing. But having goals and objectives is really the key. If you don't have a goal, you're probably not going to get too far. And that's just not with what I'm doing. It's with any kind of trading, right? You're a discretionary trader. If you don't have a goal for what you're doing, you don't have an objective, you're going to be in trouble. So you got to watch out for that. Okay, Powell's asking some performance for the last year, my personal performance. You can email me and we can discuss what I give out. I got to be careful about that kind of stuff, obviously. I'll tell you, identity theft is no fun. I've been through it twice. And you'd be surprised what people can find out about you. So Jeff is asking, would you do a real case test and evaluation in the near future? I don't know. That's a good question. Yeah, I guess possibly I might do it. I know that I have some videos out there that do run through some sample type strategy development things. You can check those out. Milan, hopefully I pronounced your name right. If we would like to build strategies outside of trading applications using Python, what's the best type source of data? I don't know because I use TradeStation, so I get TradeStation's data. There's a lot of data vendors out there, and it also depends if you're doing futures or Forex or stocks. So it's hard to say there's one better than all the others. The one thing I will say is if you're going to test data with a certain vendor, historically, that's the one you want to go live with. Don't try to use IQ feed for historical data, but then go live with Interactive Brokers data, because you will get some different results. And there's a few different reasons for that, which I can't really have time to get into, but that does happen. Jen's the book winner. Congratulations again. How do you like Keith Fitchin's bar scoring? I know I've looked at it, but I don't have anything with it. But I do use some of the stuff that Keith has done over the years. He, for those of you who don't know, he's a book author. A number of years ago, he wrote a pretty famous trading system. So there's a lot of good stuff with his. Okay, let's see. Do I do anything for Ninja? Trey's asking. No, I use Ninja as a portal, but I don't actually use it. Amet's asking, I know program, I have several strategies. I cannot stop manual trading, just focus on automation. Could you give me some advice, please? It's hard to do both, Amet. It's hard to try to do manual trading and do automated or algorithmic trading. My advice is just stick with one. And I know that's not great advice. John has left, and we probably, I've got time for probably 2 more questions. I know there's a bunch more, but I don't want to keep you guys too long. Neil has a good question. He says, models might go out of favor, might not work after 5 years. So my fear of back testing something over 5 years is it might stop as working as soon as I start. so I tend to jump now rather than forward test. I guess the question is how long do models work, and how do you know if they've stopped working? That's a good point, and that's something probably way too advanced for today, but you've got to know when to quit. So you have to put something in place to say this strategy is no longer working. And there's a lot of different ways to do it, but you've got to do it. That's probably the biggest thing. Most people think about it, but they never do it. And then when their strategy fails, they come up with all sorts of reasons why they're going to ignore the fact it failed, and that usually hurts them even more. So come up with something that you feel comfortable with that says this failed, and stick to it. The other thing is, yeah, I mean, I have some strategies I've traded for probably 8 to 10 years that still work reasonably well. Maybe not as good as they used to, but they still work well enough. But part of this is you continue to develop new strategies. It's not like you develop a bunch in May of 2019 and then you can keep using them for 5 years. Some you'll be able to use maybe that long. Some might last a year. Sometimes you'll come up with better ones. You just got to continuously work on it. Okay. Let's see. We'll take one more question. And again, I apologize. If I don't answer your question, but like I said, just send me an email. Last question from Brandon. He says, just wonder your thoughts on Larry Connor's latest book, Buy the Fear, Sell the Greed, Behavioral Quant Strategies. I have not read it, so but I have used some of Larry Connor's stuff before and did find value in it, so it could be very good. So it certainly, that I'll say that about just about every trading book out there. Every trading book out there is good to read. Every magazine article is good to read because you're either going to pick up something or you're going to disagree with it. But either way, it improves your learning. You keep yourself open to new ideas. Some you're going to like, some you don't like. I remember watching a TradeStation webinar a few years ago with some quote-unquote expert who was a doctor. He kept calling himself doctor. Well, he was a veterinarian. Okay, well, yeah, it's a doctor, I guess. But he wasn't like a PhD in statistics, right? So anyways, he said some stuff that I just totally disagreed with. And I disagreed with it enough that I went and tested it. And I found that the exact opposite of what he was saying was right. So even though he was giving out what I think was bogus information, I was able to make value of it. And that's the key. So Thomas says, stay away from his work. So he knows who I'm talking about. All right. So anyways, I'm going to turn it back over to Terry. I just want to thank everybody for coming out and spending the last hour and a half with me. And like I said, if you have questions, email me, kdavey@kjtradingsystems.com. I will be in contact with the book winners and get your books out to you. All right. Well, thanks, everyone.
Thank you. Thanks for the information and for spending some time with us this evening, Kevin.
Oh, you're welcome.